Hey guys, how's it going today? So today I wanted to do a video on dividends and what is a dividend. I'm going to be doing a brief explanation as to what a dividend is. Plus I'll be adding some additional information that you might not have known. So dividend is simply put cash or additional profit that's paid out to shareholders of a company. Um, One of the first things that you hear in business school is that the objective of an investor is to get a dividend in the future from a company. I don't know how true that is. Quite often, I find capital appreciation is a driving factor, but certainly, especially in mature investors, it's something that they look for. Dividends are usually paid out quarterly, sometimes more. And these are approved by the board of directors, as I explained in one of my other videos that was entitled "What is a Stock?" Um, so basically, as I said, it's cash that's paid out to shareholders, so the owners of the company. So I'm going to start with this example here. This is just a Canadian company called Dividend 15 Split. Um, its primary objective is actually to pay out a high dividend and pay out the dividends of the companies that it owns kind of in this fund. It's almost like a mutual fund or an ETF, if you will. Um, so if you look at a Google Finance here, there's different places you can find this information. But I find that this is a good source, and I'll show you guys in a little bit how to actually find this. Um, on the right here, we have 11.04. So we have the dividend and the yield. Okay, so this yield means the percentage that you're getting. So this is based on a yearly basis. So in the terms of this company, you're getting 11.04% per year on your money, right? So if you put $100,000 in here, you'd be making $11,000 a year in dividends. And on the left here, that's what you get per share, right? So you get 10 cents per share, and that's basically how it's calculated. Um, in this case, this company actually pays on a monthly basis. So you'd multiply this by how many times it paid out per year, divided by the share price here, and that's how you get the yield. There has been some confusion that I've seen with some people that I've taught about this, is that this number can change, right? It actually does change every second that this number changes because it's based upon the share price. Some people that I've spoken to seem to think that the company adjusts it or something of that nature. No, that's not true at all. The company may or may not, quite often does if they start paying dividends, change this. Usually it's upward every quarter, and that will affect the yield that you get. Hopefully you get a higher yield. But this number only changes when the price changes. So quite often companies can be quite attractive when the share price here tanks because then their yield goes up because you don't have to spend as much money to get more dividends coming in because this is per share. But if you can buy more shares, then you can get more money in dividends, right? So it can be very attractive. However, it's something to be aware of because quite often if a company just tanks, there's something financially wrong with it, and the board of directors might actually cut the dividend, right? Another factor to consider that a lot of people may or may not know is that there's an ex-dividend date. So you can't just jump in every month before this dividend is collected. Quite often this date is 2 days or so before. You have to be a recorded shareholder in order to get shares issued to you, or not shares, rather, dividends issued to you. I won't go into that in too much detail. Also, another aspect that I think very few people understand is that that the share price will actually change once the dividend is paid out. Now, that might seem a little bit strange to people, but if you think about it, and if you look at my other video on what actually a company is, what a stock is, it makes a lot of sense. If a company is paying out a lot of its cash, that's part of the value of the company, the equity, and it's going out of the company, that equity should not be worth as much. So basically on the ex-dividend date, without getting too complex here, the exchanges, so in this case, this is on the Toronto Stock Exchange, adjust the price downward to reflect that payout. However, you're usually not going to see it because as we all know, the share price fluctuates every day. People are buying, selling every second. But in some cases in history, I believe Microsoft is one case where they paid out a very large special dividend, which a special dividend can be declared by the board of directors. They've got too much cash, or they, for whatever reason, they want to do it. And you actually saw the price decrease significantly because of that, because the money that came out of the company. So as you guys probably know by now, this is one of my favorite stocks. So I'm going to use Apple to show you guys a different way to find this, actually the official way to find this. So just if you look at it here, I will show you again. Apple's paid on a quarterly basis. Usually that is what it is every company. So 63%, sorry, 63 cents a quarter, right? And as you can see, they've been upping it. They've got so much cash that they're going to continue to up at 38 cents back here, but every quarter. But currently we're at 63 cents, right? So this last payment was on November 10th, so that will be the last one of the year, right? And then that's how it affects the yield. You're making 1.46% on your money based on Apple's share price right now, which is really low. But if you want to take a look at it in a different way, I'm going to show you guys how to read these in a different video. Leave a comment down below if you really would like me to do that. This is Apple's quarterly report, the last one. So if you look through here, this is the income statement here. If you look all the way down at the bottom, cash dividends declared by share. See, that's what mirrors what we saw on Google Finance here, 63 cents, 63 cents. And it's kind of nice to look at it on here because you can see how it varies from quarter. In this case, they're doing 3 months. The last 3 months, 3 months, 9 months, 9 months, you can see how it increases. There's actually a couple other places that you can see it as well. It's interesting to look at it to understand what's going on here. If you look at, this is the cash flow statement. So down here, payments of dividends and dividends equivalent. You'd have to do the math on this. I'll show it to you on the next one, but 9.4 billion it paid. This is for 9 months ended. This here is Apple's actually yearly report. I'll show you the top of it, the 10K. Lots of valuable information in here, and I'd probably like to do a video on this in the future as well. But if I get down to it here, there's a lot of information on this. This will show it on a yearly basis. So if you look here, this is interesting. In 2017, so they give a little blurb here. It's always good to read these. They increased their capital return program from 250 billion to 300 billion. So Apple's got so much money. What's included in this is share repurchases. I won't explain that in that video, but that's a company repurchasing shares to increase earnings per share, which makes it seem more valuable to the company. Talks about the cash dividend. So if you look down in here, it's really nice on these annual reports. You get a yearly basis. So in 2017, I mean, this is huge, $12.7 billion was paid in dividends in cash to employees, or to investors rather. And you can see all the years how it's increased significantly here. We keep going down here. Here it is again. So for the year they paid, this is a consolidated income statement, if you will. Cash dividends declared per share for $2.40 per share was declared during the year of 2017. This is the number of shares that are outstanding, and they use to compute earnings per share. Don't worry about diluted. That's, giving restricted shares to CEOs and stuff like that. We won't talk about that. So if you times 2.4 times that, you're going to come up with a number above that I disclosed, whatever it was. Here, if we look, you could do the math if you'd like. It works out to $12.769 billion. So you can kind of check in that way, and it's interesting. Then you can start understanding financial statements. Here it is right here. Also, like I said before, there's another way to look at it. This is on the balance sheet. The cash flow is one of my favorite statements to look at. So consolidated statement of cash flows here. If you go down again to financing activities, payments for dividends and dividend equivalents, there's that number we were talking about, 12.769 billion. So it's represented there too. It all adds up. So if you really want to look into the financial statements and see what's happening, seeing how it's increasing, you're not too sure if the website that you're looking at is accurate, what it's paying per quarterly, per quarter, per month, or whatever, you can always look in these documents. And since this is an American company, this is on the Securities Exchange Commission, right? So I'd like to do a video on that in the future. But I would love to hear your guys' thoughts on it. If you'd like this video, give it a thumbs up, subscribe, and make sure to turn on the notification so you know when I'm releasing a video. Anyway, have a great day, guys, and I'll see you in the next one.